Hello, everyone, and welcome back to my stock channel. This is James with another stock update for you. New ticker symbol CD, Chinadata Group Holdings LTD. Uh, we're going to analyze where they're at right now, what their books look like, what we think of the price. I'm not going to talk about their industry. I don't speak Chinese, and I don't know what they do very well. But actually, I will find out for you in this video, so you will walk away knowing what they do. But I'll leave that to the end. Chinadata Group Holdings Ltd. I'm guessing they hold many different companies. $6.47 a share, and they started life. Well, a year ago they were at today, Friday, Monday. Today's Monday. 675 a share down to 647. They took a good plummet. In the last year, they've been living up to $9 a share and as low as $4.30, $4.50, $5.30. Very recently, 6.30, 6.26. That's 20 cents right there. Yeah, 626 was right over here at the very end, right before they went up and down today. Their 6 months chart, big collapse. I like these nice rolling stocks. You just kind of pick a bottom trough and you seem to always find yourself back in it. I just don't like buying at high points. It's one of my personal, I don't know why. I still believe in that old rolling stock theory that they used to teach back in the 1990s. But yeah, some of them roll, I guess, or at least in hindsight they did. 5-year chart. This company looks like they were in the 30s, in the $20 range, down to $6. China does not value companies the same way the United States does. Either they're worth less because they're in China, or they just, as a custom, assign them lower PEs, price per earnings values. But we can still get a look at how they are. Here's a nice quarterly, annually growing company for the last year. The revenues are growing, 1.39 billion on this end, 700 something million on this end. Their profits, 114 million up to 241 million, and they disappointed. The revenue went up. They disappointed here a little bit with 116. They actually did like half the money they did the quarter prior. Let's hope we see something show up in the balance sheet for December 2022. Annually, just another growth story. Lost, won. 2 wins. 651 million for the year. 316 million for the year. They were losing 288 and 174 in these 2 years, compared to 1.63 billion and almost a billion. This is the kind of income statement that you would drool over in the United States. I almost wouldn't care what they did. I wouldn't care if they were selling electric cars. I wouldn't care if they were selling electric solar panel battery chargers for iPads. All the goofiest, weirdest inventions that you've ever seen in your entire life. The pet rock. If the pet rock did this good, I don't know. I'd be a little tempted. I'd say, I don't know. It seems like they're not just growing yearly. We see that with a lot of companies, yeah. But then we go to quarterly and we don't see the growth anymore. The annual growth of revenue went from nothing to something to a bigger something. So I like that. What happened to them last quarter was disappointing. I'd like to hear the explanation on that. I'd like to see the next quarter. Annually, did I say 4.5 billion a year. That's how big they are now. They're a monster. $660 million worth of profit. Wow. That's just so impressive. So that would be, well, I don't know, let's see how many shares they have outstanding. It'll give us a clue what their, well, I guess it'll just tell us the earnings per share. 365 million shares outstanding. So I'm guessing around a $2 earning per share, since they have earned $600 million last year. They have $3.12 billion in cash. Earnings per share is $1.30. I guess they have to pay taxes and all that other stuff before they can calculate that. Yeah. If you're earning $1.30 a share in the United States, sports fans, your stock is not worth $6.47. It's more like $40 or something like that, or at least $20. If you just have no growth prospects and you're losing money and your balance sheet's upside down, it's still worth $20. Such a difference between us and them and the valuation. And keep in mind, this is just not Americans being mean to the Chinese. The Chinese value this themselves. They're stockholders, they're stock purchasers. They could rally this up to whatever they think it's worth. Between the two countries and the rest of the world, we're giving it $6.47. When the company should be worth a lot more than that. Market cap $2.3 billion only. Wow, that is just that's sad. I think they deserve more than that. $6 a share. Here's their balance sheet. Well, look, it's almost like a dream company, you know. Maybe the whole thing's fake. I don't know. Maybe that's why it's valued so low. Look at the growth of the assets. It's like, hello. This is money that they made that they didn't even report up here. They even could have reported more money up here. But they're out acquiring assets. They're acquiring some debt too. That might have helped them pay for a good chunk of the assets. Seems like their proportionality is still right around 50%. Their quarterly balance sheet, that's kind of frozen. They haven't really paid off their credit cards. They have $12 billion in liabilities. Ooh, that's not good. That sounds like an awful lot. $12 billion in liabilities for a company that only does $4.5 billion a year. Yeah, that's a real wicked situation. I don't know how they're able to handle it. Let's see how long they've been handling it at this level. I mean, here back in 2020, they had $6.5 billion in liabilities. I mean, they shouldn't have been able to handle this. They shouldn't have been able to handle this one, 4.5. They're making their payments, whatever this is. It's like either super long term and super low interest, and somehow the monthly payment fits into this operating cost of $704 million, and they're able to run a profitable company like this, even with all that wicked debt. Now, I know their assets outnumber their debt, but you still want to look at the debt number and see if it's too big. In this case, yeah, it's triple their revenue. So how is the monthly payment so low that it's so affordable? I'm thinking that the monthly payment's probably big, and I'm thinking this is like a 70-80% gross margin company. I'm guessing most of this is profit. Their operating expense is $704 million out of $4.5 billion. And then the debt might be that too. And the rest of it's maybe a little bit of cost of product, if there even is a product. I don't know. I'm going to go press pause really quick and come back and tell you guys what they do. Would anyone like to take a guess? And I'll give you like a few seconds to think. Chinadata. So they're in China, and it's got something to do with data. And they're group holdings. So those are your clues. Okay, hang on. Here comes what they do. Well, if you guessed cloud and web hosting and data centers, you would have guessed correctly. Basically, they set up a shit ton of servers in a great big warehouse, and they rent web space to people for cloud purposes, for web hosting purposes, for companies, remote access servers, for apps worldwide. This is a 90 plus margin business. That's a recurring customer. Every time you land a customer, hopefully they stay. And when they stay, they pay again next month. And then you go add more customers, and then they pay again next month. The growth is usually fantastic on companies like this. They've been able to connect the dots for 5 years in a row. Eventually, you hit something called, I guess, I'm going to call it peak velocity. It's the highest level you can get. It's kind of where Facebook is right now, where you just can't affordably get any more customers to make it meaningful growth. And then you start to establish, well, you always have churn, and that's how many customers you gain every month to how many customers you lose every month. And eventually this place will have so many customers, maybe when they hit $10 billion, let's just say that might be the number. Maybe it's it could be 5 billion. But they reach that number and they might be adding 10,000 customers a month, but they're also losing 10,000 customers a month. Eventually you get so big, because they always lose customers every month. Every one of these years and every one of these quarters, they lost customers and then they gained some customers. They're gaining a lot more than they're losing, so they're growing. Eventually you get so big where you literally start out your month knowing I'm going to lose 100,000 customers this month, knowing that that's your sales record. So then you know you're kind of at the cap of your game. When you see one of these cloud companies or hosting companies level off for a while, that's when they've reached their churn. How many customers they lose every month is the same as the number that they're bringing in. So there's lots of different words and language for that to explain it. But you can either start falling from there, or you can come out with a new marketing plan and continue it growing upwards. But it just becomes more challenging because, like I said, you wake up that first day of the month knowing that you're going to lose 250,000 customers this month, and you're like, okay, well, we got to make 300,000 this month, and it's one record after another. And eventually people, I'll tell you, Mark Zuckerberg, he took that churn way past, what, he go to 3-4 billion people on Facebook? I would expected him to be losing more people than he was gaining, at a couple of billion or a billion, but he went double that. So where is this terminal velocity? I have no idea. On this particular company, they clearly haven't hit it yet, and they don't show many signs of hitting it this year. Year over year, they're going to look just as strong. Had 1.39 billion in revenue for their highest quarter ever compared to other companies. I don't think they're even close to that level yet. So Maybe when they hit the 20 or $30 billion range, maybe then they'll have a problem like that. You can compare them to other companies and find out when it just becomes unobtainable because you have too much. But they're not there yet. I was just sharing that with you as to one of the pitfalls that this company might see in the future is they're losing more than they're gaining, and then that growth is over. The growth story is over. Then it becomes a maintenance story. Let's just keep our customer. I like this company. It's tech. They look responsible. I don't like the high debt, but it seems like they manage it really well. It's growing, and they still manage it well. Maybe they didn't manage it that well. This last quarter has me bothered. I wonder what happened. They have plenty of cash to buy themselves anything they want to. I don't think they had to raid the earnings report for the cash. They have $3 billion. So they didn't raid this for, $150 million. That would have been ridiculous. Screw your earnings report up over a one-time expense when you have the cash. Chinadata Group Holdings LTD. I'm trying to pick a company that's over in China. They have, or Asia in particular, they have no inflation over there. It's like 3%. They don't even have the problems that we have over here. They're a whole lot more poised to have a good 5 or 10 years than we are. Yeah, their prices aren't their stocks aren't valuated the same way. But this is Chinadata. I just wanted to introduce you to this one. Keep your portfolio on the USA side, obviously, but to have some minor exposure to companies around the world. And I'd stay away from Europe. They just have our same inflation problem. The people with the inflation problem went out and spent $5 to $7 or $8 trillion after and during COVID. China didn't do this. Japan didn't do this. South Korea didn't do this. These countries looked at it much more differently. They decided not just to throw cash at the problem or print cash to fix the problem. So check this one out for yourself. I know it looks awful here for a 5-year chart. The 1 year is interesting. It's at a low point right now, so it's kind of right where I would like to scoop it. The 1 month, it's kind of like a low floater the way it's going around. Average volume, 1 million shares a day. It's not that low float. But yeah, and this cruise from 675 to 750 all the way back down, making you sweat back to 595, making you sweat back up to 7, and making you sweat back down to 650. A lot of sweating in this one. How much can you trust them? I don't know. At this point, I'm starting to trust them more than a lot of these American companies. I am a total capitalist, but capitalism has its group of people that take advantage of the capitalism. At least in China, you'll probably get the death penalty for cheating on your business. And for that reason, I'm slightly confident in these places, just a little bit. But if we have a war or some kind of embargo or the wrong guy wins the White House and we have economic sanctions again like we used to, I think we're okay with China for the next couple of years. We'll see. Until they invade Taiwan, and then you never know. We could freeze trading with their stocks. This is hooked up with the New York Stock Exchange and the NASDAQ and the Hong Kong Stock Exchange. So we have a couple of parties that control all of this trading activity that are not part of China, unless Hong Kong is by de facto part of China. I don't know what their status is today. But there's a company, there's a tech company. That's what growth looks like. That's what quarterly, annually, that's what a good income statement looks like. That's way too much debt. Clearly they can afford it, unless they ran into some affordable issue this month, and I don't think that was it. Yeah, there's really no news on the company that I can find. I'm going to keep looking. We're going to look at this one more. This seems to be one of the most attractive ones I've seen so far. I really like the roly-poly charts. I love the one-year chart. You see these spots and you're just like, hi, I'll take some for $6. I don't know how long you got to wait on average for it to go to $7. Well, here you had to wait like 2 weeks. And here you had to wait like 2 weeks. That's pretty much how long you've had to wait for it to come back to, $6.50. To $7. Yeah, this is $6.50. And this is, what is this here? Is that 9? Oh, good Lord. It goes all the way up to 9. Yeah, this is 8. So yeah, for this thing to go from $6.50 to $7.50 is probably a 2 week is the world record for the last year that you've had to wait. Maybe 3 weeks here. I don't expect you to have to wait long here. I see this one had started the spike up already and cooled. You'll notice right when it hit this cavity, it spiked up and cooled. And I don't believe in any of these trend lines and stuff, but it's just interesting. This one went down. It didn't have to cool. It just came straight back. Then it cooled. But at least it came way back before it did. I like it. I like the growth. I like the company. I like how much cash they have. I just don't like the country they're in. Maybe us American companies can start buying these things. I don't know. Are we even allowed to do that over there? I don't think so. But that's what a healthy company looks like. I wish I'd see more of these around $6 in America. Good Lord. Check out China. CD, Chinadata Group Holdings. Have a good night. Please like the video and subscribe to my channel. I'll do more videos on Chinadata. You can catch up with them in the near future.